Okay, let's talk tech. We got the S&P 500 and the Nasdaq in record territory once again on optimism about profits from that sector. We're joined by Eric Jackson, founder and president of EMJ Capital. He's got some stock ideas for us. Always has some fresh thoughts. Eric, great to see you.
Hey, Andy.
Let's get into a theme that you're seeing now in tech investing. If you could, a very broad subject, but if there's one overriding message that you have for us when it comes to investing in tech, what is it right now?
Well, I feel like this year I've been focused on 100-bagger ideas because a couple of years ago I found Carvana very early when it was sort of in the midst of a comeback. It had gone from $400 to $3.50 at the end of 2022, and now it's come all the way back to 400. And yet, when I talked about it 2 years ago, there wasn't a lot of interest in it. This year, I've started talking about the next Carvana, or I found this company that I think has 100-bagger potential, and there's a lot of interest in it. I find, and especially from, I would say, the middle class, Andy, and not just in Canada, in the U.S., around the world. There's a feeling around the world amongst the middle class, I would say, where people are finding it harder to kind of get ahead financially in life. They're crimped on all sides from taxes and cost of living and whatever. And they really see the stock market as a way of kind of moving their family generational wealth ahead. And so many people saying, hey, I missed the last Carvana. I'm not going to miss the next Carvana. So it's a desire to go beyond the Mag 7 in tech and to look at some of the smaller cap names that they think not next month, but next year, 2 years, 3 years down the line with a buy and hold approach, they could really see, a multiplier effect in these kinds of stocks.
So you have some ideas. Sana Biotechnology, you reckon this could be called the Tesla of cell therapy. What draws you to this stock?
Well, in my family, I've got 4 kids, and one of them has type 1 diabetes, which, 100 years ago meant a death sentence. And then thanks to Canada, we discovered insulin, and now it's a different prognosis. But there is no cure yet for type 1 diabetes. And Sana is a biotech company that is really taking a different approach, trying to build a platform approach with stem cell research behind it, where they can where they have already found evidence in just a few human cases where they can actually reverse type 1 diabetes, do some gene therapy where you can actually, basically cure type 1 diabetes. And that market obviously is a huge market unto itself globally. But, if they are able to prove out kind of these early human test results in wider scale studies, there's potential to bring that kind of cell therapy approach to other diseases and cure it in a similar kind of fashion. So it's a $1 billion market cap company today with these kind of early, strong, positive test results. But as they prove it out in the next couple of years, if it works, it can be a potentially like $100 billion type of company in a few years. So that's why I like it. I think it's been ignored to this point, even with these kind of remarkable early test results.
Iris Energy, you think is a good play on the infrastructure of the AI economy. What do they do? Why do you like them?
We all agree AI is the future. We're going to not be reducing our chat GPT queries anytime soon. But we usually only think about NVIDIA, maybe a Palantir building some of the AI apps. But we don't think as much about what powers that underneath. And obviously, you've got to build the data centers. And underneath that, you've got to buy the land. You've got to buy, negotiate the local agreements with the power authorities wherever you build those data centers to have access to cheap power to power these power-hungry data centers. And so Iris Energy has been sort of at the forefront of this. Also in Canada, too, by the way. And they have a couple of facilities in Prince George, BC, but they're building a couple of huge facilities now in Texas. And what's attractive about them, and I think what's been overlooked, although less so now compared to May when I got in this name, is Iron has 3 gigawatts worth of data centers that are going to be energized, or the flip will, be switched in the next 12 months. And so that makes them the belle of the ball to all of the hyperscalers out there like Oracle and Microsoft and Meta and Google, who need access now to these kinds of players that have the data centers already built, not in a few years from now, but now. And so just recently, there was a company called Nebius that did a one gigawatt deal with Microsoft in New Jersey for one of their data centers, and it ended up doubling the price of Nebius, going from like 45 to $100 right overnight. It's, Microsoft committed to something like $18 billion worth of revenue to Nebius over the next 6 years. That was just 1 gigawatt. So you can do the math pretty easily for what it means to iron with 3 gigawatts. And the other thing is that, it's like musical chairs. Like the more these deals get announced, the remaining kind of players on the dance floor, suddenly become even more valuable, and their gigawatts more valuable. So iron is sort of the class of all these players.
Eric, we could talk to you all day. I'm sorry, we'll have to leave it there. Thank you very much.
Thanks, Andy.
Eric Jackson, founder and president of EMJ Capital.